Hello, dear soldiers. So, today we are going to deal with the topic of auditing, where we are going to talk about the basic aspects related to auditing, the nature of audit, the objective of audit, and the scope of audit. First of all, you should know why are we doing audit and what is the meaning of auditing, the definition of auditing. Because without understanding the definition of auditing, you will not be able to appreciate the objective or the purpose of audit. First of all, what do you mean by auditing? What is auditing? Auditing is an independent examination of financial information with an objective to express an opinion on such financial information of any entity. It may be a profit-oriented or not a profit-oriented entity. Ultimately, the objective of audit is to express an opinion on the financial statement of the company. Basically, I as an auditor, my job will be to examine the financial information. See, the role of an auditor starts where the role of an accountant ends. See, the job of an accountant is to prepare the financial statement. Now, what does financial statement comprise of? Financial statement comprises of, say, balance sheet. We call it as statement of financial position. Then you have profit and loss account or statement of profit or loss. Then you have cash flow statement. Is nothing but statement of cash flow. Then explanatory notes, and then statement of changes in equity. My dear soldiers, understand that a balance sheet shows us the financial position of the entity. How much is the asset? How much is the liability? A person may come to know about it by looking at the balance sheet. A profit and loss account shows what is the operating results of the entity, how much profit they have generated. And my dear soldiers, a cash flow statement shows how the cash is generated. Is it generated by operating activity? Is it generated by financing activity? Is it generated by investing activity? You come to know by looking at the cash flow statement. And explanatory notes gives description of the accounting policy. What accounting policy we follow to prepare a financial statement, those descriptions are given. And finally, you have statement of changes in equity, which gives details about the share capital and the reserves and surplus account. What is my capital in the beginning of the period? What are the transaction during the year? Say, for example, we raised new funds, we raised share capital. We also issued, say, bonus shares. And what is the quantum of dividend which was declared? So it shows the movement of the owner's equity. That is statement of changes in equity. I, as an auditor, will examine each and every item of these financial statement. I will examine the balance sheet, the P&L, the cash flow statement, the explanatory notes, the statement of changes in equity, which is prepared by an accountant. But my role as an auditor will be to examine that whether these financial statements are prepared properly as per the books of account. So, to going back to the definition of auditing, my dear soldiers, auditing is an independent examination of financial information with an objective to express an opinion on such financial information. See whether the entity is profit oriented or not, whether the entity, irrespective of its size or form, whether it is a large corporation or a small organization. Ultimately, my job as an auditor is to examine, validate the information, whether the information contained in the financial statement, is it showing a true and fair view. Let me give you an example for this. Let me take a balance sheet. Now, looking at this balance sheet, you have share capital, say 50 crores, current assets, say 25 crores, non-current assets, say 25 crores. So this is the balance sheet. Now, this balance sheet was prepared by an accountant. An accountant, he prepared this balance sheet. Now, I as an auditor, I need to check that whether this balance sheet is prepared properly or not. That is my objective as an auditor. Now, what will I do as an auditor, my dear soldiers? I'll ask evidence for each and every item. If I suppose say share capital is say 50 crores, I want evidence for 50 crores. Now here we call audit evidence as what? Sufficient and appropriate audit evidence. That is called as SAI, sufficient and appropriate audit evidence. Now for share capital, the audit evidence available is 50 crores. It is matching. No issues. It is matching. There's no problem at all. Same way there are other items in the balance sheet. I want audit evidence. So if current asset is 25 crores, I want evidence for 25 crores. Okay, fine. I ask for evidence. They provide evidence. Now I told you SAI. What is SAI? Sufficient and appropriate audit evidence. Sufficient means quantity of audit evidence and appropriate means quality of audit evidence. So I as an auditor, I will ask for audit evidence. So for each and every item, I want audit evidence. Okay, current asset also 25 crores available. Good. We are standing good. Now I ask for non-current assets. Non-current assets comprise of fixed assets, comprise of intangible assets like goodwill, patents, copyrights like plant and machinery, buildings. Now non-current asset, the evidence available is 20 crores. It is not matching. Now the SAI is not matching. So we don't have an appropriate audit evidence. We don't have sufficient evidence. I go and talk to the client. Sir, share capital is matching. Current asset is matching. But what about this non-current asset? It is not matching. Evidence is, there is a difference in the evidence available. Now there is a difference of 5 crores. This difference of 5 crores, this mistake of 5 crores, this error of 5 crores, we call it as what? Misstatement. See, first of all, one mantra you should learn, all the students. If you want to score good marks in auditing, you should use right kind of words. If you don't use right kind of words, you will not get marks. See, take example. In English, you have several words. I am scared. I am petrified. I fear. See, all the three words has same meaning. Whereas it's the same way in auditing also. Here you come across, okay, there is a mistake, there is an error, there is also a misstatement. But here we should say there is a misstatement of 5 crores. What will you do? You will go and talk to the client. You will tell the client, see, there is a misstatement of 5 crores. Client will tell, sir, I'll give you some money, sir. I'll take some money, sir. Please take some money. Please, sir, don't report this actually. Please don't report. Now, should you take the money? No, sir, we should not take the money. He'll offer you money. He'll say, I'll give you 10 lakhs. I'll give you 20 lakhs. Should you take the money? No, you should maintain the independence. Client will say, okay, sir, would you want a holiday trip? You want to go abroad? You want to travel abroad? Just go abroad. Just enjoy, sir. What is there? Why are you stressing too much actually? You go abroad. You take your family members. You take your article assistants. No, sir, no, we don't want his holiday also. We don't want holiday. We want evidence for that 5 crores. Sir, I'll give you jewelry, sir. Please take jewelry. No to jewelry. So he'll make all this kind of offer. I'll buy jewelry. One client, he came to my office. He was telling me, sir, I'll buy jewelry for your wife, sir. Damn, who are you to buy jewelry for my wife? I'll buy jewelry for her. They'll make this kind of offer. Should you accept? No, sir. Don't compromise on your independence. They'll say, we'll offer you property. You should not accept, sir. That is why, what do we say? What do we say, my dear soldiers? Auditing is an independent examination of financial information. We have to be independent. We should not compromise with our independence. We should maintain that independence throughout the audit. And client will tempt you, okay, I'll give you this, I'll give you that. See, there are two types of professional. One who will accept this kind of offer, who do all this kind of adjustments. We don't fall to that kind of category of professional. They are all adjusting auditors. We are the auditors. We are the independent auditors. That is why I again repeat the definition. Auditing is an independent examination of financial information with an objective to express an opinion on such financial statement. And financial statement comprises of balance sheet, P&L, cash flow statement, explanatory notes, statement of changes in equity. Ultimately, as an auditor, my dear soldiers, understand that we ask for evidence. And what is that evidence known as? SAI. SAI means what? Sufficient and appropriate audit evidence. Also, further soldiers, if there are differences, errors or mistake, you call them as misstatement. You'll go and talk to the client, tell, sir, please rectify these misstatements, or please give me evidence for these items. He has to give you evidence. If he does not give you evidence, then accordingly, you have to see the impact of those misstatements, those errors on the financial statement. Ultimately, what does an auditor checks? That you should know very clearly, my dear soldiers. First of all, the accounts are prepared as per books of account. This is very important. You should ensure that all the accounts are prepared as per the books of account. That is the first and the foremost thing you should check as an auditor. Okay, whether the accounts are prepared properly or not. Second one, my dear soldiers, the entries, whatever entries you are showing, they are supported by SAI. There is a sufficient and appropriate audit evidence available. So you should see that whether evidence is available or not. And evidence not available, as I said, you should go and talk to them. Please provide me audit evidence. Sufficient means quantity of audit evidence, and appropriate means quality of audit evidence. And further, my dear soldiers, you should see that no entry is omitted. There is no omission of any entries in the financial statement. You should ensure that all entries are recorded. If suppose say company has made a sale of 25 crores and they have just recorded 24 crores, no sir, no. We should include that 1 crore sale also, which has been omitted by mistake by the client. So that also has to be included. And also, what are the other things auditor checks? Auditor should check that whether information is clear, unambiguous in nature. There should be clarity in the information. There should not be any kind of confusion in the information. So the information should be very straightforward and clear. I should not say there may be a sale of 10 crores, there may be a sale of 25 crores. This is not what we do. There should be clarity. The reader should understand what information we are placing there. And also, my dear soldiers, understand that the amount which is shown, it is properly classified, properly disclosed, properly presented. That is very important. Take example, a capital item is presented properly, a revenue item is presented properly. There should be proper classification of the items. Now, for example, you purchase a fixed asset. You will not show as an expenditure. You will not charge off to P&L. So you should take a sufficient care that there is a proper classification, disclosure of the amount which has been presented, and it should be presented as per the accounting standards. And lastly, my dear soldiers, understand that ultimately our objective is that the financial statements what we are doing audit, they should show true and fair view. Okay, so this is what an auditor does. Thank you very much, soldiers. Go through the video again, and I am sure that you will solve all the questions, understand the concepts very clearly. First is that understanding of subject. Second is that you should know that we have to use that language only for the purpose of writing in the examination. So please go through the notes and also solve lot of test question. Okay, see you in the next video.